Well, sometimes when you are trying to work out which way the economy will head in future, you have to look at what's happening right in front of you. Like, how many of you noticed and thought about how deeply discounted the mid-year sales were just over the past few weeks? Or indeed the implication for retailers if they can't clear bloated stock levels? Well, the man who predicted the global financial crisis has been watching and thinking about something called the Bullwhip effect, as Edward Boyd reports.
Michael Burry, the millionaire hedge fund manager who predicted the US housing crash in 2008, triggering the global financial crisis, is back with another warning: the bullwhip effect. He has encouraged people to investigate it and says it could spell the beginning of a looming recession and eventually a lowering of interest rates. As demand rises for goods, retailers scramble to order more, and in some cases they over-order. In response, manufacturers gear up for those big orders and expect them to keep coming, so they start to overproduce. Retail stores and their distribution warehouses end up flooded with stock that no one wants, no matter how much it's discounted.
Yeah, I mean, there's certain COVID winning categories where retailers may not have, anticipated the right timelines of when the COVID winning categories would unravel. Things like, pyjamas, Ugg boots, gym equipment, home gym equipment were all really popular categories during lockdown. But now we're out and about, some of those categories would be suffering quite significantly.
So is this happening in Australia? Absolutely. And the sector most affected is apparel. A lot of seasonal clothes are now on sale, and lots more.
So for a lot of retailers, it means clearing stock at the expense of margin. So for those retailers that have got warehouses full, it will be important to convert that into real sales, into cash, and clear it as quick as they can.
But it's worse in America, where retailers including Target and Kmart are telling customers not to return unwanted goods, to keep them. If they are returned, they are not resold, but end up as landfill. Michael Burry pointed to a CNN story about this in his tweet.
Products ending up in landfills, customers don't really even think about as part of the purchase process.
Every year, returns produce an estimated 5 billion pounds of waste.
So you get a situation where there's too much inventory eventually, and a massive clearance effect, discounting activity, and we're definitely seeing that in the US. It's really turned quite quickly about 2 months ago and caused a lot of pain for retailers in the US.
Here, the same thing is happening. Warehouses are filling up. Space is at a premium.
We are pretty full. We are extremely full, and it's a good business to be in. Having said that, the growing requests from our customers to store more products. They are rotating certain products, but we still need more space for us to grow.
Call all this the Cubby House effect. During the pandemic, home office equipment, gym gear and cubby houses sold in record numbers. Now there are warehouses full of them. Oddly, the same is true for pets. People bought pets for the pandemic. Now when they go on holidays, it's hard to find a boarding kennel. For retailers, this effect is a major challenge. If they get it wrong, it could be terminal. They can try to hang on to the stock and clog up their warehouse. They can sell at whatever discount they can to move the stock. Or they can offload the excess stock to a third party like Grays that can sell the items quickly at whatever price is offered.
So there's a couple of different ways it can be done. Is they would approach, normally there's sort of stock which they might have higher quantities of, and particularly with supply logistics at the minute, there's normally higher quantities in certain SKUs or assets. And we would either sell directly from their locations in a dropship opportunity, or they'd bring it into our logistics warehouses and we would dispatch them from there. And we would sell on behalf of sort of major retailers, other businesses and clearance channels.
Grays, the online auction company, is one of a number of businesses that deals in remaindered and unwanted stock.
Look, it can vary on year to year, but normally it's over 1 million assets, 1 million items a year. And that can be sort of the change here, and what you see in our 11 logistics sites around Australia. There would sort of be anywhere between 15 to 20,000 assets turned over every week.
It sells up to 60,000 cars a year and around 30,000 cases of wine a month.
So we've got a fridge here, white goods. How long would you take to turn this stuff over?
So typically we would get monthly consignments of this sort of stuff in, and we would have it normally sold within sort of 3 to 4 days of being up at auction.
Well, I'm here at Gray's main logistics hub in Sydney, where there are hundreds of thousands of items here for sale, and they move through the products really quickly. Within a week, everything around me will be totally different. But there's so much available here, even the kitchen sink.
Another company that shifts thousands of items per week through its warehouse is B Dynamic Logistics, based at Kemps Creek in Western Sydney.
So we have retailers like Aldi, Costco, and on the other side, Dimex Books Online, and then DoorDash, where we fulfill all the merchandising for food delivery riders and the drivers, as well as the restaurant owners.
BDL is a logistics, warehousing, fulfilment and distribution company which just celebrated its 17th birthday. Chief Executive Mal has noticed increased inventory levels from some of his clients.
That has been the case last 2 to 3 years. The inventory levels are quite high, and the footprint can exceed from a standard contracted footprint double or triple. So we are similar sort of products we are holding 200% or 300% in some cases.
Retail analyst Craig Woolford at MST Marquee says warehouse space is becoming an absolute premium.
Yeah, one of the challenges is the distribution centres are full. Many of them have taken what they call off-site locations, so they'll rent another warehouse to store the extra inventory. The holding cost is probably not the main risk. The real issue is whether they're just caught with too much inventory if demand slows, because in that case they'll end up discounting that inventory and making a lot less money.
And it's the smaller retailers that will suffer the most.
The bigger and more sophisticated some of these retailers are, the better prepared they are to be able to disperse across many of their store networks. The smaller retailers, if they really did bulk up for a Buster 22, they're probably going to feel it a lot worse than the larger chains.
The total size of BDL's facility at Kemps Creek is 26,000 square metres, but with the high levels of customer demand, it needs more storage space. The problem is, with the global supply chain disruptions, the cost of building a new warehouse is getting very expensive.
The challenge is building materials coming to the country for property developers is a challenge, and obviously shortage in building materials in the country at the moment. That has a flow-on effect, not having enough properties available for us to expand to support the retailers. So it's a very, very fine balance, and it's a very tight market right now.